Yes, hello once again traders, welcome back to Trade Like Skills channel. Have you wondered how I make this amount of money every day when I'm trading? Whenever I take an entry and then the entry or the market goes to my direction, sit and look at this video. So in this video, we're going to look at the 15 minutes liquidity sweep strategy that I use, how to take these trades, when to take these trades, and what to follow when you are taking an entry, and where are the liquidity zones on 15 minutes chart, and at what time are we supposed to be taking the entries. But before I go too far into this video, make sure you join my free Telegram channel. You can check the link in bio or in the description. This is where the link is, or in the description below this video, and then you join my free Telegram channel, because in coming days I'll be giving out free signals and I'll be giving out some promotions and some money to those who are trading well, guys. So don't miss out those chances. And if you want to join our premium or VIP channel, of course, first join the free channel and then you can get to join our premium channel, and then you can make this kind of money each and every day. Let's come back to our video today and what I'm teaching. So make sure you sit down and wait until the end of this video. Now let's get to this. Firstly, we are looking at liquidity sweeps entries. That's the first thing. And where do we find liquidity really? To those who have been watching my videos, you really know now where we find liquidity on the market, because we are having buy side liquidity and sell side liquidity most of the times, and trend line liquidity. So firstly, let me show you this, and then you can see what exactly we follow when we are taking these trades that I'm talking about. So firstly, let me bring this out. Let's say the market has been going higher highs, breaking to the higher zones, retesting and going high. We call this an uptrend, right? And then how about if the market is doing this? Going down, retesting, breaking lower lows, retesting, breaking lower lows, retesting, breaking lower lows. This is a downtrend, right? So we very well know that we have those two types, and then this type of a market, how the market reacts with this, and this one we call it a consolidating market. It is not breaking higher highs, no lower lows, but only most of the times it's just sweeping liquidity, internal liquidity, according to the leg where it formed from. So now what are we looking at? Firstly, we are having the uptrend, we're having the downtrend, and we're having the consolidating market. So where do we find liquidity really? Firstly, we know that liquidity is above these zones and is below these zones, and also above these zones and below these zones. Same as here, lower than these zones and also above these zones. So that's where liquidity is created. And to those who don't know, liquidity, it's money. And which money? Your stop losses that you set whenever you take a buy entry or a sell entry. So now what are we looking at, and what do we follow, and where do we take those trades from, and why should we take those trades, and how really do we have to take those trades? Now let me first delete this so that I can make it easy for you guys. I'm going to show you the real examples of the market as I do always, so just don't mind much about these lines that I'm drawing, but they are just for explanation. So now let's say this market has been moving higher high, coming back, breaking. The market is breaking higher high, and then the market retests and then does this. You see this? And then after doing that, the market breaks. Did you see that? So where do you think is lying liquidity? Now liquidity is here. Why? Because the market has left a lot of liquidity. And what liquidity is that? It's a sell-side liquidity, and it was created by buyers. Buyers who entered from this zone thinking that the market will always continue higher, and then they put stop losses here. So here we are having liquidity that is being left that side. And I think you remember when I talked about inducement, and that's why sometimes you don't take these entries from these zones, because liquidity is lying in this side. And then when there is liquidity, also we are having another block below here that might be waiting for mitigation if the market has not mitigated it. And that zone must be taken when there is an imbalance in front of it, or when there is enough liquidity, or when there is liquidity that is already formed again that is going to be taken by the market. Because whenever the market is moving, it's creating liquidity. But what do we look at really? Because most of the times when traders come into the market, they just look at a few things and then they take entries and they end up failing, right? So now we are having liquidity here. We're having also imbalance this side, another block here. Do you see how inducement zones are formed? Now this one turns into an inducement. Let me mark it here. This zone turns into an inducement zone. Do you see this zone? This zone is inducing more traders, or it's a trap for traders who are going to come and take an entry in this zone, and then they end up losing. Why are they going to lose in this zone? One simple answer: because there is liquidity below that zone. And if the market comes, of course, the market is always hunting for liquidity. If you really don't know anything about the market, I'm sure the market is always hunting for liquidity. That's it. Market is looking for money, and money, only money, can make the market move. If there is no money in the market, of course, the market won't move. Yes. Now, where do you think the market will come to? If we are having a good and a clear imbalance here, the market will do what? The market will come for the imbalance, fill the imbalance, either fair value gap, either comes and taps into this fair value gap and moves after sweeping this liquidity, or comes up to this other block down. If there is another block somewhere here, fills the imbalance, sweeps liquidity. Sometimes it creates more liquidity here, drops, sweeps all the liquidity that is inside, then the market moves to its normal direction. Now, let's imagine the other block here is already mitigated by some wick, and here there is no imbalance. What do you think is going to happen? And that's what we are talking about today. And that's the trade that I took, and you see how much I made. Now, the market will come down. Let me do this. The market will come down, drop. So someone will be waiting here for the market to come and hit other block and then move. And another one will be waiting here for the market to come and they take an entry, in which this entry won't be valid. Are we together? Why? Because there is liquidity below that zone. And where is liquidity? Here. And this liquidity is mostly seen by the wicks that are being left here that are not yet swept by any bigger wick. Now, let's see. When the market comes up to here, it sweeps liquidity. Most of the times, after sweeping liquidity, market sometimes moves in, because here there is, sorry, let me remove this. Let me mark this again. Okay. Market comes, sweeps liquidity here, and then when the market moves, because here there is much, there was another block that was supposed to be broken. Was supposed to be respecting the market, or to be respecting the direction that we are supposed to be taking, which is in a buying direction. Now, what will happen? The market will come here into this zone, because this zone is now strong and it has been broken. But if it has been broken by a wick, it won't be considered as a strong zone still, though it might push the market down again, at least for a few, to come and mitigate again this new zone that has been formed. And again, the market moves high and breaks these higher highs. So that's how we take those trades. So how do we really take those trades? Do we have to first sit and go to lower time frame confirmations? Sometimes you don't need that. Why? Because when the market is stripping liquidity, the market is faster. These are what we call snipe entries. So they are snipe zones where the market will come, strips liquidity, at least retest that zone again, and then moves. Hence breaking this higher high, creating a break of structure. Do you see that? Now, what do we follow in order to take these trades? Firstly, we follow the direction of the market. We very well know that this market has been in an uptrend. Market has been buying and going higher highs, creating BOSs to the higher zones. Now look at this. Market still here, created another BOS to this side. So it's a must that the market must be in that direction, breaking. To those who are in my class, they know what breaking is. Real breaking is different from liquidity sweeping. Because if the market breaks or the candlestick breaks, it's a different way of a liquidity sweep breaking with a wick. So guys, you need to come to classes and learn. Now let's go to the real chart, and you see where I took that trade from so that you can understand. Now, when we look at this zone, really, this market was coming from this lower zone, buying from here, and we can see and confirm that the market was breaking higher highs with BOSs, fully breaking with BOSs until it reached here. What happened? With this zone, the market only swept liquidity here. After sweeping liquidity here, market retested to this zone and then tapped into this. We can call it a breakup block because this was a break here, and then the market came up to this zone and then kept on moving. Now, let me show you the peak. Do you remember what I've just said recently? When the market is breaking higher highs and then leaving liquidity behind, this was liquidity that is being left behind. And the market is breaking higher highs. I think you can see that. And here we're having imbalance. So this zone can really work as an inducing zone or an inducement zone. Why? Because there is liquidity below that zone. So we need the market to come and sweep that liquidity below, and then we take an entry. So this is what I did. I waited for the market to come. Of course, I gave this entry in the VIP. I gave this entry in the VIP, and they took this trade. So, of course, the market comes, sweeps liquidity. We took an entry here at the tip here, and then the market moved already. And then you can see this was a bigger move. Even if you took this halfway, the market moved really big, really huge. Then after market moved really huge, left an order block behind. I think you can see this. This is an order block. Another block was created behind, and then the market retested into the order block, hence moving up to the higher high. Same as what I've just said here, this side. Same as this. Now, this is what happened. The market came, swept liquidity. After sweeping liquidity, market moved. After sweeping liquidity, retested to the order block that has been formed, and then market moved up to when the market broke the higher highs. Same as what happened here. And we took this trade, I think, last week on Friday. So this is the trade we took, and the market moved. This was a good trade that we took. Market moved up to its initial 269 pips, up to its initial take profit here up. So this is the trade we took on Friday, and you guys, I told you if you want to join my VIP. By the way, about the other book, I was selling that book, the PDF on seller, but seller is having some issues. So I think you can contact me if you can reach to my free channel, free Telegram channel, and then I can drop it to you if you pay out. So if you want to join my Telegram channel, of course it's free of charge. You just tap here and then you tap on that free Telegram channel, which is this one, Telegram channel. And then if you want also the recommended broker, this is the recommended broker that you can be using for now. And then you can join my free Telegram channel, guys. You can join my free Telegram channel. There is link here. There is also link that I'm going to put in the description down there below. You can check it and then you join. More videos are coming, guys, and I think you can keep on watching the videos that I've been posting so that you can understand more about trading. Thank you, guys. Ciao. Let's have a great time trading and make more money, guys.